Is there a bubble brewing in the market among the biggest companies in the world? I think that could be the case exiting 2023. That's what I'm going to get into today. Is why the Magnificent Seven stocks, seven of the biggest companies in the world, have outperformed the 493 other companies in the S&P 500 in 2023, and what we should look for in 2024. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I want to start with a quick review of exactly why these Magnificent Seven companies, which includes Tesla, Nvidia, Apple, Amazon, Meta, Microsoft, and Alphabet. Why were these companies the best companies and the best stock performers of 2023? Well, this chart really tells the story. A lot of it is about multiple expansion. You can see that there's only one company, Nvidia, ironically, where the price to earnings multiple fell throughout the year. It was down 6%. That's partly because Nvidia came into 2023 with a very high price to earnings multiple and then actually lived up to it. They actually outperformed that high multiple. So that's why that PE multiple is down, but some of the other companies are up just a tremendous amount. Meta was on a recovery path. They had a very low multiple exiting 2023. So maybe makes a little bit of sense that they were up significantly, but 178% increase in your price to earnings multiple is still a massive jump. Tesla was up 88% in the price to earnings standpoint, despite the fact that margins have been falling all year. Alphabet and Apple up around 50%, and even Microsoft has that artificial intelligence halo. Price to earnings multiple is up 38%. And like I mentioned, I think the driver of all of this has been artificial intelligence. Led by Nvidia, the company has seen an absolute explosion in demand for their GPUs for both training artificial intelligence models and then running inferences. And the tech industry obviously think that there's a ton of growth to be had in artificial intelligence and the use cases going forward. And from an investment perspective, the investors saw that growth at Nvidia in particular and said, hey, we got to get in on that. Who else is going to have a great year because they have access to artificial intelligence? Well, some of the obvious answers are some of the biggest companies in the world. Microsoft obviously partnering with OpenAI. You have Meta building their own models and has, I think, very obvious use cases in social media, and then even with their hardware products like the glasses for using artificial intelligence. Apple, I think, is a dominant company from a hardware perspective, and they could benefit from AI, whether they're building it or somebody else is. And then Tesla has obviously been talking about AI for a long time as well. The question is, can these companies live up to the expectations that the market is now putting on them? When you have a price to earnings multiple of 50, which is what the average is today on a trailing basis, that means investors are expecting a lot of growth in the future. So how much are these companies growing? So that's what I want to dig into next. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Here I want to look at the revenue growth for all seven of these companies over the past 5 years. And 5 years is sort of a random number to choose, but I didn't want to choose something in the middle of the pandemic, which kind of distorted the numbers. So I wanted to go back far enough where we were pre-pandemic. So I just chose 5 years, but you could do any length of time. And this is the compound annual growth rate, is the CAGR that you see at the bottom. And this is where I think at least some of these companies are starting to get pretty concerning from a valuation perspective, because they're not the growth companies that the market is obviously pricing in given the current price to earnings multiple. Apple, I think, is a great example. 7.6% CAGR over the last 5 years. That growth is slowing because iPhone sales volume is slowing. So they're having to raise prices to generate basically the same amount of revenue for the iPhone. That's a low single-digit growth product at this point. And most of their growth is actually coming from the Apple Watch, AirPods, and services. So they're not growing the hardware. They're not growing their user base like they were for well over a decade. And you can see that revenue is actually starting to decline just a little bit. Not a huge drop in Apple's revenue, but is definitely not up over the past year. Some of these other companies are growing really significantly, but I think we need to question, is growth slowing? Microsoft, Amazon, Meta, and Google are perfect examples of that. You can see the growth rates were pretty significant in 2020, 2021, but now coming back a little bit down to earth. So can they attain a not only double digit, but in some cases 20% growth rate? I think that's a big ask for companies as big as they are going into the next decade. So clearly very expensive. Tesla is the one outlier here, CAGR of 40% over the last 5 years. That's because they have been increasing their manufacturing capacity at a really rapid rate. They're actually increasing prices through about the middle of 2022, but that's sort of reversed in the last year. Tesla's had to lower prices, margins are starting to come down. So I could argue that there would be some reasons you would want to pay a lower price to earnings multiple for Tesla, given the pressure on their bottom line, than you would for a lot of these other companies. But the market has not seen it that way. They've just been bidding up all of these companies because I think of potential growth in artificial intelligence. And we don't really know what that looks like yet. Even a company that's leading the way, like OpenAI and their partnership with Microsoft, we don't have a great idea of what sort of revenue is going to be generated by Microsoft and what sort of margins are going to be over the next 3, 4, 5 years. Yes, ChatGPT is very cool. Yes, there's a lot of interesting image and video things being created, but exactly how much profit is there to be had from these companies? That is to be determined. And I think that it's pretty easy to make both a bull case and a bear case for every single one of these companies. But this is exactly what has happened. But looking backwards, we can get an idea of how much these companies have grown. Most of them in the mid-teens range. So is it right to pay 30 to 40x multiple for a company growing in the teens? That's still a hefty premium, price to earnings growth of over 2. So something for investors to consider heading into 2024. What I think this data ultimately shows, the fact that we have very high price to earnings multiples, multiple expansion in 2023, and growth at these massive companies that maybe doesn't justify those really high multiples. I think that tells us that a lot of the opportunities for next year are not going to be in these magnificent 7 stocks. Lightning doesn't often hit twice. And next year, I could see a lot of these companies facing pressure as the expectations for growth maybe aren't met in quite the way that investors are hoping. So we could see multiple compression. At the same time, you're seeing a much lower price to earnings multiple of under 20 for the average S&P 493 stock. So that's a pretty reasonable multiple, especially if you're getting a good multiple from a profitable company with solid cash flows that's maybe just being overlooked by the market today. That is where I'm seeing a lot more opportunities outside of the Magnificent Seven. And I could see the Magnificent Seven having a fairly tough year in 2024, especially if these growth numbers and artificial intelligence performance isn't what a lot of investors are pricing in. But what do you think about the future for the Magnificent Seven? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.